Hi, it's Tom Sohn here, and I've got a really common question. I'm asked this all the time. Are rent prices going up or going down? It's always a question that property investors ask. So I wanted to give you my opinion on it right this second. And it kind of follows what the sales market is doing. Now, look, a lot of this is opinion. No one actually knows what sale prices and rental prices are definitely going to do. You can make forecasts and estimates based on some statistics and calculations. You can take educated guesses on what might happen or what is likely to happen. But there's no categoric, definite answer to this question. So, my advice, first of all, is have a listen to what I'm saying and what I think. Have a listen to what other people think. You'll see a pattern in the way that everybody calculates what they think is going to happen to rent prices and sale prices. Now, so the question is, are rent prices going up or going down? And I'm talking about over the next couple of years. And the reason why landlords and property investors need to know this is because for property investors, you'll need to be able to give a decent forecast of what rent you can achieve when you buy a buy-to-let property or a flip-to-let property or a BRR, buy, refurbish, refinance. You'll need to know what rent you could achieve over the next couple of years. And landlords, if you've got rental properties now, then you'll need to know what potential rent you could achieve again over the next couple of years. But there is a warning. I'm going to give you a warning at the end of all of this, which you definitely need to know about. But first, let's talk about rent prices. Now, a quick way to look at rent prices is to understand that they always follow sale prices. But there is a bit of a delay in if the sale prices are going up, then rental prices will stay about the same for a while, and then they'll gradually start following the sale market. And the reason for that, and to use the current sale market as an example, as you probably know, if you're a property investor or you're a landlord looking at the sales market, properties are selling at the moment for silly prices. They're coming on the market and they're gone within days, just purely because people are prepared to pay silly prices for properties at the moment. I myself have just sold a property that I only bought 2 years ago, and I've sold it for something like a 30 or 40,000 pound increase in value. I had it mortgage valued for 210 just under 2 years ago, and I've just sold it for 247. It's ridiculous, but I take advantage of these things. I'm a property investor. That's the point. That's the name of the game. If someone's prepared to pay for it, great. So look, people are paying silly money in the sale market right now. Has anybody else, by the way, noticed this? Have you sold any properties? Are you selling currently? Might be a good time to sell if you've got a bit of equity there or it's jumped up in value. But anyway, that's a whole nother point. I do, by the way, as you know, provide a landlord to landlord property sales service. So if you're a landlord with a tenant in place, I've got loads of landlords that want to buy properties that are already tenanted. It seems to be quite popular at the moment. Anyway, so yeah, people are paying silly money for properties at the moment. I'm taking advantage of it. I do think there are going to be a lot of down valuations, meaning if someone offers high money for a property and then the mortgage lender who's acting for the person that's buying it sends out a valuer, a surveyor, to go and look at that property to make sure it's worth what the customer is paying, then if there's no comparison evidence or there's no evidence to support that purchase price, then the valuer will down value it. And that's where they basically say to the lender, it's not worth 247,000, it's worth 235,000. So then the lender will say, we're not going to lend you 90%, 95%, whatever it is, of the 247. We're only going to lend you a percentage of the 235. Hopefully that makes sense. Anyway, and a surveyor will only look at evidence. So there are going to be quite a few down valuations, I think, anyway, over the next 6 months. There's already been quite a few, but, you know, the market is buoyant. So there are some that are going to get through this market. They're going to be able to be purchased for silly money because the surveyors or let it happen. Now, what happens then? If those higher priced sales go through and they complete, even if it's silly money, even if we think this is a ridiculous price, if they complete, they hit the land registry. Now, those properties are evidence. So other surveyors that are trying to act for the mortgage lenders on other property purchases that are silly money now have evidence of other properties that are also sold and completed for silly money. So whilst there will be some down valuations, some sales that fall through, some will get through, and that prompts more to be able to go through. Now, obviously you have to add into that supply and demand, right? If there's not enough properties coming to the market, then there's not going to be enough completed sales. Or if there's too many properties on the market, prices are going to start coming down because everyone starts competing to try and sell. But all I'm saying here is the rent prices, after a small delay, will follow the sale prices. It's inevitable. It has to happen. And I'll explain why. So keep your eye on the sale market. Again, when it plateaus and starts steadying out, which it probably will, then the rental market will probably follow. So why does it follow the sale market? And it's important to know this stuff, because if you understand what the sale market's doing, then you can understand what you're going to forecast or what you're able to forecast in rent for the future. Or if you're buying a property, you'll be able to do the same thing. So if people pay more for a property, then of course they're going to have higher mortgage payments for that property. Now, it's still an investment. You're not going to buy a property and rent it out for less than you're paying out each month. Now, yeah, there are some people that buy property with cash, but most people buy property with mortgages. So therefore, if you're paying a higher amount in the purchase price, it means you're borrowing more. It means your mortgage payments are going to be higher, which means your rent needs to be higher than that. Now, if we add into this that interest rates for the Bank of England have just gone up, which means mortgage rates are probably going to go up a bit too. That means your mortgage payments, Mr. and Mrs. Landlord, Mr. and Mrs. Property Investor, are also going to go up. That means that the rent is going to have to come up with it. Otherwise, you're going to make less profit. And you know my rules. You've got to make profit. It's your duty as a landlord to make profit so that you can support your tenant's home. You can support your investment. Otherwise, what's the point? So mortgage payments go up, whether that's through interest or through higher purchase prices. That means the rent's going to go up too. And that is why there's a delay. Because it's not that all rental properties all of a sudden go up in rent. No, because what has to happen is, first of all, purchases have to go up in price. Then the rent, once you advertise that property for rent, that has to go up in price after you've bought the property. And then all the other properties that are currently tenanted, when they become ready for a rent review or tenancy renewals, or if a tenant moves out and you have to find another tenant to move in, now what somebody will see, or the landlords and letting agents will see, is that these properties, because of the higher purchase prices, these properties are on the market for £50 more than I was charging. So I'll charge £50 more for my property. And now you just get gradually more people add to their rent. And then you get Mr. and Mrs. Property Investor down the road they've done a real top level premium rental refurbishment, really high level. So they could charge an extra 75 quid. So now another one comes on the market, which is higher price, and that's how it goes. So the higher the property prices for sale are, after a period of time, the higher the rental prices are going to go. So it's kind of like a domino effect, really, isn't it? If you watch the sale market and watch what that does, as that goes up, then the rental prices go up. It's the same the other way round, but slightly more damaging the other way round. And by the way, my thing is that I think rent prices are going up. Over the next 2 years, rent prices, I think, are definitely going up. I don't know what they're going to do after that, and I'll come to that in a second. But now you've got all of these properties that are higher in rent. But we also have the current cost of living is going up. And it's actually getting a bit out of control as far as I can see. And yeah, you're absolutely right, Mark. Auction prices have been crazy. It's crazy to see some of the properties that are selling that need 40 or 50 grand's worth of refurbishment done to them. The prices are up here. It's madness. But it is what it is. All the time people are prepared to pay for it, then they will sell for it. And then all the time that there's evidence to support the purchase prices, they'll carry on going. And they all kind of interlink in that sense. So anyway, I can't remember where I was going with that. But the point I'm trying to get across here is that watch the sale market. As that goes up, rent prices will follow over the next couple of years. But, and this is a big warning now, this is a bubble. You could call it a bubble. It's not one of those internet bubbles or the dot-com bubbles or anything like that, but this is a bubble, and property always does this. It's going to burst. Now, I don't mean that prices are going to come tumbling down and you're going to lose 50 grand on your property purchase. I don't mean that. What I mean is that, first of all, with sale prices, there's a limit to what lenders will lend on, to what people can afford to buy. And that means there's a limit on demand. There's a ceiling on demand. And when there's a ceiling on demand, there becomes a ceiling on supply. Because if somebody all of a sudden says, oh, look, we can sell for this price, that means we can afford our dream home. If all of a sudden they can't afford their dream home, they don't sell. So therefore, supply comes down, demand comes down. Simple as that. Now, I don't think sale prices are going to go through the floor. I actually think they're going to kind of steady out, maybe drop a couple of percent, maybe more in other areas. There are weaker areas in the property market, but I do think they're going to start steadying off and coming down slightly, not by much more than 5%, I don't think. Now, that doesn't matter if you're a long-term property investor where you buy and you keep. You're not going to be selling it in the next couple of years, are you? You're buying it to keep for 20 years so that you keep that rent coming in. And this is where it gets interesting, because rent, once you've put it to this level and your tenant's in and paying that rent, well, the rent doesn't come down. You've got that rent. That tenant is in and they are renting the property from you. They make their home there. They're paying the rent and it stays there. So whilst sale prices might come down a little bit, the rent is still there. So you kind of have to look at it like it follows the sale market like this. And there is a warning here, by the way. It follows the sale market like this to the ceiling of that time. And then the rent prices follow that. And then when they start coming down again, the rent prices stay as they are because tenants are in tenancy at that rental price. But then when that tenant moves out and you find it difficult to rent it again for that high level, that's when you might see a little bit of a drop. That's when you put it on the market for £1,000 a month. No one wants to take it, so you have to drop it to $950 just to get a tenant in. So it's always going to follow the sale market, in my opinion. I think I'm right with this, and I've been doing this for 23 years now. God, that's scary. 23 years. So I think I've seen this many times, and it happens a lot. You all know the sale market goes, whoa, up like this, and then it stops. And then it goes up like this, and then it stops. The rent prices do the same thing. So look, my warning to you is this. Number one, I do believe this is a bubble. I do believe that if you buy a property now at the top money that you can buy a property, you might be overpaying today. But if you're keeping it for 20 years, the chances are it doesn't matter if you pay an extra 5 grand today. In 20 years' time, that 5 grand will be non-existent, meaningless, irrelevant. So don't worry about spending an extra 5 grand to get that rental property that you really want now. That's the first thing I'll say. And the only thing that changes, by the way, the sale market can do what it wants. The only thing that changes for you is your offer. Don't change your offer. If you're going to buy a property, your offer has to be calculated based on the yield that you can earn from that property. Don't change your offer. The offer is the only, don't change your yield. The only thing that changes is your offer. So, and also make sure that you understand that if you're charging high price in rent now, that might not be the next time that you rent the property out. So also when it comes to the rent itself, my advice to you is to charge the fair market value, not full market value. And by that, I mean, if you see all the properties on the market for £1,000 and one property goes on at 1,100, you might be better off popping yourself in the middle of those two. Because 1,100 might be the absolute top market value, but what it means is that you'll move a tenant in there who's paying full whack. Now, if the cost of living carries on going up, that tenant is more likely to fall into arrears. And that tenant is more likely to always be looking for the next deal, a better property at a lower rental price, which increases your chances of having a couple of months of an empty property at some point. Now, if you're charging £1,000 a month, just 2 months at an empty property is £2,000. I did all that maths by myself. So you can make sure that you have a more secure, reliable tenant by not being greedy and charging the full absolute maximum you can possibly charge, or just being prepared to drop it down if you need to. You know, think about it. What would you rather have in that instance? A tenant for a year paying £1,100 a month, or a tenant for 5 years paying £1,000 a month? I know what I would rather have. It's much more secure. It's lower risk. That's the point, isn't it? Make profit, reduce risk. That's it. So just to go back, and by the way, I've always seen that the most greedy investors and landlords are the ones that always end up losing money. Always. Greediness in this industry never works. You have to be smart. That's the way I see it anyway. So just to recap, what do I think rent prices are going to do? Over the next 2 years, I think rent prices are going to continue creeping up. Definitely. I think over the next 2 years, property prices are we're peaking at the moment. I feel like we're peaking. I don't think it can go much higher than where we are right now. Certainly not where I am at the moment in Portsmouth. So I do think sale prices are going to be peaking here. And I don't think they're going to drop down much. I think they're going to stay where they are for the next couple of years, and rent prices will follow. So get out there and get buying. And don't forget what I said here. Definitely stick to your yield target. You don't need to change your yield just to get a property. You have to, if you want to make 20% profit, make 20% profit. The only thing that changes is your offer. That's it. And if you're a landlord right now and your tenancy is coming up for renewal, or you're due a rent increase or a rent review, or you've just bought a property and you're about to rent it out, try not to go for the absolute max that you can go. Your tenant's more likely to move out if you do. So let me know what you all think. Are you buying a property right now? Is it silly money? Are you looking at your local property market and thinking, how can this be? I was absolutely shocked. I'm selling 2 houses at the moment, and I'm absolutely shocked at the prices I'm getting for them. And one of them is being bought by another landlord. It's a great house. It's a great property. He's paying a good price for it. But I was absolutely shocked at what the current market is doing. So, yeah, let me know in the comments below if you're also buying, or you've got a property that you're thinking of increasing the rent to. If you want a rent valuation, just let me know. Drop me an email, tom@pinkstreet.co.uk. I'll put you in contact with someone that will definitely value that property for you very quickly. Anyway, that's it. Good luck, everyone.